What is good for the neighbors? This Arthur's trading hope are doing well. Bruv, we are not even 10 minutes. Oh, not 10. We are not even 20 minutes into the market, but my day is already done. The price one was very beautiful and got myself let's say I could make some nice money. I did get out in profit, but I could have made more because my monitor is broken. It's you probably can't see this, but my monitor is showing different than what you are seeing. You are seeing absolutely normal. I tested out already, but what I see is my monitor keep on flashing, and it has stripes. And for example, my chart is here right now, and I move it away, but there's like this shadow in the back. I can't really describe it, but LG owes me money basically. But anyway, I'm gonna just break down this trade real quick, and maybe it's a sign from God that I should take some time away from my from all the computers and weird stuff. Anyway, let's get into the trade. So if you haven't watched the weekly review, go watch the weekly review. Okay, so keep in mind that higher time frame are bearish. Okay, if you don't know why or blah blah blah, whatever, go watch the weekly review. So high time frame is bearish, very bearish even, and yeah, look at this nice drop. So what happened was, I was waiting, nothing really interesting here. Market opens, directly trades up, but this is a 930 trap. Why? Let me tell you why. Because if you look here, this wick is very significant, and the 50% is holding the price from the Friday's price action, right? The low of this wick is previous week low. Time-based liquidity, very, very strong. And also you can see equal low here as well. But more importantly, if you go into here, let me make like this. So in between these two white line, it's Friday, and you can see the yellow line is Friday's low. So this wick low of the low of this wick is the previous week low. Okay, and this yellow line is the previous day low. So the low from the Friday. Okay, and then what happened was, if you look here, we traded down, we take out that Friday low liquidity, right? Previous day low liquidity, time-based liquidity, very important. And what happened was the price start to retrace. Okay, I don't want to go to the 30-second or whatever on this part, but just understand we take out this liquidity and start to reverse. But I'm not really interested in taking a trade. Why? Because for me, I knew already that this is gonna be a trap. Yes, the price traded higher, and you could make money on this run. Let's say here consolidation, and take out the liquidity, right? You could take the trade and make money, but I didn't take it. Why? Because I know this, and this is not only me saying it, hindsight, okay? You can watch back on my weekly review video. I called it out. I said on higher time frame I'm very bearish, and I called out my liquidity draw. One is the first two low-hanging fruit target will be this low of this candle, because that's the previous week low, time-based liquidity, and also this two, that's the relative equal low. Okay, I called it out on my weekly review. You can look back on that, right? Okay, and what I'm trying to say here is that this is only a retracement. If you look only the 1 minute time frame, you can see, we chopped the run here a little bit, up and down, and boom, this significant run with the 9:30 open liquidity. Yes, you could make money on that. I'm not saying you can't, okay? But keep in mind, we're in a bearish market, and my expectation for the market is bearish. So I didn't take the buy, and then I realized something. Watch this, okay? This yellow line is previous day low, Friday's low on the 15-minute chart. Let's go to the 15 and put on ES. The low is here. Did we take that out? No. Far away from it. Okay, we are trading here right now. We are far away from the low. Okay, then you go to YM. The low here or here, doesn't matter. The low is somewhere here. Okay, where are we trading right now? Definitely didn't take out the low. You know what it is? It's a 6 sister. So I'm like, okay, so it's a 6 sister, and it matches my high time frame bias. So I'm gonna take a sell instead of a buy, and I left all this push up alone, because I know this is gonna be the manipulation run. So trade it up. Where to? You could say here this balance price range, or this hourly mitigation block, whatever. But just keep in mind, this is the manipulation. We only traded up to trade down. Okay, so I catch myself the sell. Here, my entry was even higher than this on the 30-second chart. 50% as well, 50% of the regular trading hour gap. Boom, starts to drop, sharp turn, breakaway gap, also balance price range, and measuring gap. Okay, entry here, stop loss here, and the low hanging fruit target will be this. Yes, the low hanging target fruit will be this. So the swing low that we created from before, and you can see it played out really well. I planned it to take a partial like here, at the bodies here as well. Y equal low here, right? Always take partial, and also we're very close to our full TP. But it was on the 15-second chart. I even added one more contract as we traded up here, but I closed it before I got out, like here, before the price started to really drop. But I was still in profit, and I'm kind of mad, to be honest, that I missed the move, because I knew it. It's like basically seeing money on the floor and not pick it up, but it's just fucking my eyes up way too much. and it's kind of not worth it. And it gave me mad headache as well. So anyway, pretty decent trade, and it's not only about the trade. It's definitely not about the logic, not about the entry. If you wanna like know more about like everything that I know about trading, and because in my opinion the logic behind it is way more important than what on I don't know a order block you entry on, or on a breaker, or on this fair value gap. Entry is the least important thing, and I just opened a new series on my YouTube channel. I just named it Brain, or My Brain, or whatever it's called, and basically I just no script yapping, talking about everything that I know about trading, but most importantly it's gonna be the logic behind it, because there's all these people out there giving you like my secret model, but brother, no, it's like if you just trade after this model, you're gonna like, bro, like you're a pattern trader. Like you basically say, okay, when the price does this, I sell here. Like, bro, no logic. The price will always makes those type of moves, but not every time you do 2022 model will work. Even though you say, oh, I take the entry, I entered here, I stopped it didn't work. Why? Yes, at one point it's a probabilities game, obviously. Like you never know, right? But I'm very confident saying if I am executing my model correctly, my win rate is clear to 100%. If I lost money, it's not cost my model, and it's not because like, yeah, probability. No, it's basically because that I made a mistake. Okay, my model is very strong, not a huge risk to reward ratio, but it's a very strong model. I know it works. It works perfectly. It's there every day and it works on every time frame. If I lost money, that is because I made a mistake. Okay, but there are also other models that maybe don't have such a high win rate, but still you need to like you shouldn't trade only because the market moved in like a certain type of way. And that's a pattern trader. Okay, you need to understand the logic, and maybe today or tomorrow, but definitely this week, I'm gonna make part number 2 on the My Brain series, and talking about more. And the topic is gonna be condition of price, and so the 3 question: where's the price coming from, where are we right now, and where are we going? And I'm gonna do some breakdown and all the good stuff. So that's it for today. Starting the week green, very good, very strong. Yes, have a good trading week, guys. Good luck and good trading.